Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, December the 11th, 2012. Today we're going to be looking at Google Incorporated. Ticker symbol's GOOG. It's right there. You can see we've been in a nice sell-off here for a bit. And then we're starting to form this inverse head and shoulders pattern, which is basically just a head and shoulder formation that's turned upside down. This is the first shoulder formation, and this is the head that actually dips lower to a low point, and it comes back up here. And then we form the second shoulder. Typically, their shoulders are going to be roughly the same level that they form. This one bottoms out at 663, and this one is 680 or 602, something like that. So it's close, but they don't have to be exact. But the main thing here is when we're looking at the neckline is simply drawn from the start of the head formation to the end of the head formation. You simply draw that trend line out. If this trend line slopes down in this particular chart pattern, it would be less trustworthy and less impressive. When they slope up, they're more bullish, and so in this particular case it is sloping up. Confirmation of this chart pattern will be when we close the neckline, above the neckline here. We're up to it now. We haven't closed above it yet, so you can wait for that buy opportunity or just buy now as I've marked the chart. Another thing to point out whenever you're looking at this chart pattern, if you look at the overall situation, some chart you look at, you think you see an inverse head and shoulders pattern. Some of the things you can look for, we notice strong selling at the actual start of the formation, and then that selling will be gone by the end of the formation. So that discontinuation of the decreased selling pressure. And oftentimes you'll see an increase on buy pressure in the start of the head form, on the ending of the head formation, I should say. You'll notice that was stronger there than it was over here. So that's something else to basically point out. This is just a textbook example. There's many videos on our free website at PerfectStockAlert.com that show you different chart patterns and how to read them, how to trade them. So check it out if you've not been there. Whenever you look at this chart pattern, you can also get a target for your actual exit point. And the way to do that is simply take the low point of the head formation all the way up to the neckline, measure that distance out mathematically, and then add that to the breakout point. So for example, if we were to break out today, then we would simply take that number and add it to the breakout point. We would get an idea, a target of how high we expect price to go. About 750, 760 area, basically testing a previous high here. If you've not been to the free website at PerfectStockAlert.com, it's still right there, 100% free. All we ask in return, please refer a friend. God bless, take care, see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.